Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors for this segment, Admiral Markets. It gives me great pleasure to introduce Mr. Darren Sinden, market commentator for Admiral Markets. Darren, greetings, young man.
Good afternoon, Nick.
Anyone watching for the first time, quick recap on what this show is all about, please.
Yeah, it's meant to, and hopefully does, bridge the gap between the London and European trading sessions. They're sort of halfway through the day now, and we're just about to start trading in the US. So it's that link, if you like, between London and Wall Street, the crossover, if you will, between London and Wall Street, and we look at what's happened in Europe that's going to affect or have some bearing on US markets this afternoon, and indeed what things to look out for in US trading once it gets going.
Understood. Okay, well, to that extent, we've got a number of slides. Let's go to our first slide. Data released over the European session.
Okay, not the fullest calendar today as far as European data is concerned, but there were a few bits of note. So starting off in Italy with the consumer confidence number for July, came in at 106.5, disappointingly low considering the forecast was 109 and the prior read had been 109.3. So
it's had down.
Yes, Italian consumers not feeling the love after the Greece debacle. Business confidence, though, was in line. Not better as we'd seen in France and Germany recently, but as far as the Italians were concerned, the July reading was 103.6. That was exactly what the forecast was, 103.6. A slight dip from the prior read of 103.9, but not out of kilter as much as the consumer confidence was. And then here in the UK, I suppose more good news really for George Osborne and for the interest rate hawks. GDP numbers, so we'll start with the Q2 year-on-year number, came in at 2.6%. Yep. That was bang in line with the forecast of 2.6%. And the quarter-on-quarter read for Q2 up 0.7%, again bang in line with the forecast. Yep. The key here was that on the quarter-by-quarter basis, the figures rallied from that low read last time around at 0.4%. Must be stressed though that these are preliminary numbers, and they
are subject to revision.
Exactly, yeah. But anyway, for now, people are taking that as a positive item, and cable strengthened accordingly.
Understood. Okay, so let's turn our attention to the European movers.
Okay, well, a couple of things to talk about here. First of all, Royal Sun Alliance, or RSA as we must call it now, 503.5p, up 15%. Why? Well, as I'm sure you know, many people be aware, Zurich Insurance, that's ZURN in Switzerland, is said to be interested in acquiring the UK insurer and are considering an offer. That offer could come at anywhere up to 525 pence as far as RBC are concerned. Just as we came on air, there was a headline saying that they haven't, or RSA haven't had an official approach, haven't held talks with Zurich as yet. So it's obviously still at an early stage, but no smack with that far. I think the story seemed fairly certain that's going to happen. Kering, yep, it's a new name, basically formed out of the merger of Pernod Ricard's PPR and Gucci. So KER, the ticker in Paris, €175.10, up 7.16% this morning. And why? Well, simply because the luxury goods group reported a rise in underlying sales. Just to put some of those numbers into context, Gucci sales increased by 4.6% in Q2, and that has to be borne in mind that that comes against the background of a 7.9% fall in Q1. So the market likes what it hears there. I think I'm right in saying that we've got LVMH to come later this week, so it'll be interesting to see if they can mirror those results.
Understood. So let's take a look at M&A now. Let's look at rumours and the movers.
Okay, well, we talked about a deal in the pharmaceutical sector yesterday and said it probably wasn't the last we would see in that generic drug sector. Lo and behold, wake up this morning and there is another deal. So Hikma Pharmaceuticals, which is listed here in the UK, ticker HIK, are buying a company called Roxane Inc. from the German business Boehringer Ingelheim. They're going to pay around $2.65 billion for this business. The market loves what it's heard this morning. Hikma are up to £22.40, up 7.7%. Market cap of the company now around 4.43 billion sterling. For those who are not aware, Boehringer Ingelheim is a privately owned German pharmaceutical company. It has a big presence in the generic drug space, and the Roxane business that Hikma's buying is exactly that. It's a major player in the generic space in the US drug market. Hikma's going to issue 40 new million shares to Boehringer, who will then own 16.71 percent of Hikma. So there might be something of a poison pill or bid defence as well in there, because Hikma itself must be considered a big target in the current scheme of things. Hikma says, and this is probably why the market likes the deal so much, that it expects the deal to be earnings accretive or positive as early as 2016. So, in 6 months' time, that should be adding to the bottom line. And as I say, it's the second significant deal in the generic drug space in 2 days. And who's to say there won't be more to come? Perhaps not immediately, but in the near future.
Okay. So let's turn our attention now to US data points to keep an eye on.
Okay, so it's the start of the FOMC meeting, the last one ahead of the summer break. Obviously, we won't hear anything out of the meeting today, but tomorrow we'll get the interest rate decision for July. And in terms of outright data points, we start with the Case-Shiller House Price Index for May. Two numbers here. So the month-on-month number, we're looking for growth of 0.3%, which is bang in line with the prior read of plus 0.3%. And on the year-on-year number, which just to flag is not seasonally adjusted, we're looking for gains of 5.6%, which is up from the prior read of 4.9%. So US house prices ideally moving in the right direction. Our old friend Red Book chain store sales always comes out on a Tuesday. Just to flag, really, the last two reads in this number of dipped, and we're really struggling to get back to anything like the peaks we saw in November last year. Probably the more important number today is the flash PMI for services for July. The forecast is for a read around 54.8. That's bang in line with the prior read of 54.8. Anything better than that would obviously be good news, but a negative number wouldn't be so well received. Having said that, we've got to remember that negative number might be good news because it might mean interest rates stay low for longer. And then lastly, today, the Richmond Fed Manufacturing Index, another one of the regional surveys from the regional Feds. So forecast here a read of 7.5 versus the prior 6. Obviously, the higher the number, the more positive. And this number's been improving since February, so it would be surprised if we saw a dip in that number.
Okay. Let's wrap up with the US pre-market movers and chart levels.
Okay, well, one we touched on when I was on earlier this morning. First of all, Baidu, the Chinese internet search and commerce giant, BIDU is the ticker in the US. $180.85, down 8.51% after they posted disappointing earnings and poor Q3 guidance, basically saying that the investment they made into new businesses not yet paying off. Bear in mind, they're also down about 4.5% in regular trade, just on the back of the Chinese market anyway. And then a company that we don't talk about too often, and many people won't be aware of, a company called Knowles Corporation. That's ticker KN in the US, $18.99, up 10.15%. Knowles Corp is one of these people that makes components for mobile and portable devices, and in particular they're specialists in microacoustics. They basically reported better than expected numbers, and the market liked what the management had to say, hence the 10% rise in the share price pre-market. And then in terms of levels to watch today... And
these are all the cash levels, aren't they, to reiterate for people on the indices?
They certainly are, yep. A little bit better here in Europe, obviously, a bit of a bounce after yesterday's sell-off. So as far as the FTSE is concerned, we're playing 65.05 versus 65.90 on the upside and downside, respectively. In the DAX, 11,158 plays 11,240. S&P and the Dow, the US indices really trying to find directional cues. So really this is just around yesterday's ranges, but 2060 plays 2080 in the S&P, and in the Dow 17,400 plays 17,498 on the upside. Euro dollar, euros remain quite firm after its sort of recent plunge and rally. 110.15 then on the downside in the euro against the dollar, plays 110.78 to the upside. Aussie dollar, weaker for choice, but we just tighten the range slightly here. 72.97 now on the downside, plays 73.30 to the upside. And in dollar yen, a little bit static in the last day or two, but 123.56 our downside level now, plays 123.85 to the upside. And cable, as we said, firmed after that GDP number, so 155.75 is the downside level now, with 156.20 the level to beat to make further gains to the upside.
Excellent. That wraps up the Wall Street crossover show. Darren Sinden, market commentator, Admiral Markets, thank you very much. We'll be back same time, 1 p.m. tomorrow. Have a good day. Thank you.